Hey, Rich.
Hello, hey Jay-Z. How are you?
I'm good. I'm really excited. We're going to get into the science of AI and investments and market research today.
Yeah, me too. Me too.
Is it hot where you are? Because it's like the heat
Oh,
wave, I think, by break today.
I I am in the middle of this continent. I'm not originally from here, but I'm in the middle of this continent. Yesterday, the day before, we had triple digit. So, and that's without wind. That's just us. Go outside and try not to melt.
Okay, I'm glad that I'm not alone.
That's right.
Well, I'll do a quick intro and then pass it over to you. And, along the way, people who are listening live, please comment if you're hot. And if you're not, why?
That's right.
So my quick intro, call me jz.ai. I run an AI accelerator for founders who want to get to product market fit and validate their AI idea in 2 months or less. And Rich, really fascinated by your product because I love the strategy aspect of market research, and I've never heard it being turned into an investment product. So I'll
Oh,
turn it over to you.
hey, well, thank you, Jay-Z. No, I'm pleased to be here and excited on our next 30, 45 minutes or so. So, Rich Neal, I'm out of Kansas City. I've been an entrepreneur for many, many years, approaching about 20. I've had five startups, four GTMs, three successful exits. Within those three, two M&As, and rode one all the way to IPO. So, most of them have been within the domain of AI, or at least to utilize that as a engine to produce the data for which stuff happens from. So that's me. A little bit deeper, because that was kind of a high level. Is so I've used data and the scientific protocols underlying focus and provisioning of AI to help construct complex market models from, this might be a little bit shocking, but international sex trafficking, through to Chinese counterfeit US coins, the entry points, utilization, bad actors, agents. I've written papers on choice architecture for first time buyers of supercars. That was fun. Um, and even more benign kitty litter preferences. So
I think we should talk about the kitty litter
we'll start
preference
out with that one. Yeah, yeah. Okay, sure,
because
sure.
that's the most consumer
Base.
CPG brand
Yeah,
based in terms of like
yes,
a democratic product that everyone can understand.
for
Tell
sure.
us that story.
Yeah, it's very utilitarian. So what we've done, in fact, is built a way to measure variances within the consumer shopping experience. So, for example, there would be a model, mathematical model of a identified significant segment that would be shopping, say in the kitty litter aisle at Target. And that individual will say, that persona is a dynamic human profile, is what we call it, would be 32-year-old Caucasian female, household income, educational level, all that stuff normally associated with it, SES, but with the addition of a more, we'll say, a dynamic personality index. And that would include the interests, opinions, and attitudes of that said persona. So it's all tied back to real people. That person would be interjected into a model. In this example, in this case study, it would be Target in the kitty litter aisle. Whereupon we would introduce all the competitive tier one, tier two competitors spread out and positioned just like they are in a real Target shopping aisle. This shopper would be introduced to all the different choice architectures involved in their purchase decision. We would run these models, 400, 500,000 times with slight variances in each of the details, and look at the outcomes. And from that, we would build the normal bell curve and understand exactly what does the average shopper think when presented with this aisle with a mission in mind for kitty litter. We're able to feed that back to our clients, and they're able to utilize that to optimize, mainly in this case, it would be product positioning.
Wow. I want to get into it more.
Sure.
So let's say I'm standing in Target in the kitty litter aisle, and do you know I'm there because of beacons or like store reported or user reported? How do you know I'm there?
Sure. That can be done a number of ways. We either can tap into a store's data on their customers. Oftentimes there's a variability on how open they are with that information. Oftentimes we at least get a standard of insight there. But we also feather in different consumer models that are comparative or analogous to that shopping experience. And we base that on a protocol, a scientific protocol, collective dynamics, and really at 75,000 foot level, what we've seen across all of the spectrum of research we've done are human behaviors are extremely limited. We think you bring in the philosophy of free will and humans being, you can't forecast human behavior. And, I'd like to counter that. In any given scenario, there's choice A, choice B, and choice C based upon the persona for which we're studying. So it's not as complex as one might think. It is often a closed system to analyze. And that's what we focus on. We've termed a word called de-over complexification. You wouldn't find that in the dictionary. But that's ultimately the mission set forth is historically people have attacked this problem set in the most complex ways possible because they assume the problem set is derived of an ultra level of complexity, when it really isn't. Once you strip it down into its component parts, it's actually relatively, I use the word benign again, benign.
Okay, so you're going to help me out here. And, anyone in the audience, please comment your questions live, because I think now I have a lot of questions. I'm there in real time, or this is like we know everyone who's been here in the last 24 hours?
Sure. So in most model building, what you're looking at is historic data.
Okay.
And using that as a thumbprint for building forecasting. So it's the past history of behavior within a specific context utilized to understand future behavior within the same context.
So you don't have marketing data, you're actually anchoring on purchase data. So maybe you're getting it from the merchant or from the...
Sure. Well, we do have marketing data. We do use the marketing sciences. We have some survey information, although I'd like to stay away from survey information. That's the most biased of all data you could utilize for this. But we also have historical data on human behavior from anthropology, sociology, psychological research. So all of this helps educate the models based upon the latest information we understand about human behavior.
Okay, so you have historical data, and then you have 3 use cases or personas that
X number of personas, yeah.
Okay, and then give us an example. Like, am I buying this kitty litter? Am I not? Am I going to come back later? Like, what are some of the possible outcomes?
Sure. Well, some of them are already primed where the scenario is, or the case study for which we're building based upon the problem set that's given to us. It is customer A plans on buying kitty litter. So that's the foundational inquiry for which we start all of our research.
Okay.
And from that, we've already gotten the parameters necessary to understand how to start to build the necessary information. Now, if it's a little bit more open-ended and customer A comes into the store, well, that takes a lot more effort, a lot more computing power, because we're not highly bound to any mission other than, hey, they walk through the store door, the front doors.
Yeah, I was just having a conversation with someone at a coupon app company, and I used to I've launched coupon apps in the past, so we're always looking for that data of ingress and egress. Like, did you enter the store?
Yeah.
Did you have a mission? Did you buy something? But I think you're just looking at historical data, like they bought something.
Yes, it's better if the scenario is primed with a goal in mind in order to get it, because the ambiguous doesn't work well in this particular area.
Yeah, I don't think AI likes ambiguity. AI
No.
really likes to be trained on a data set.
It seems to prefer that, yes.
Yeah. I like to be told exactly what's expected of me as well. Like, I'm that kind of New Yorker,
Very good. Well, that's perfect segue. Did you do that on purpose? That was amazing. So a lot of this is based upon prior research and prior science and published, so at least since the late 40s, when survey sciences started. So we're getting marketing science, we're getting down to understand consumer behavior, consumer choice, things like that. As we very well know, I think the last count, there was like 37 known biases involved in a survey, ethnographics included, and how they conduct that research. And I don't mean to create any havoc there with people in that particular realm. It's just we do some things different. So the understated, it started back in the 70s with Richard Dawkins, and he proposed kind of the idea through several of his writings on the idea that information is shared, and that shared information has some type of impact. Well, yeah, I see you thinking something. Go ahead.
Yeah, no, tell us. It would be great to tell it through the kitty litter example, but I'll leave it up to you.
Sure. Well, this is still somewhat of a proto example of how we got to where we could do kitty litter. So in its fetal state, the science didn't have a real. It was under sociology, and it hadn't been specialized. It was more of a generic term bantied about through very, very esoteric groups, specific to marketing science and sociology, where that overlap happened in the 70s and 80s. Then let's explore what developed from that. Well, then we had an offshoot and kind of a renaissance where it evolved greatly, and that gave rise to a core discipline that was given the title of mimetic science. Now, the root there is meme, and the modern connotative value for meme is not incorrect, but it's been watered down to what doesn't mean any. It's a social media sharing of a post. I probably butchered that definition, but nonetheless, close enough. A meme is an artifact, a memory, an idea, some type of communique that I'm carrying around in my mind, and I'm delivering to you through a substrate, and you are like a virus, like a mind virus, infected by what I just delivered onto you. Okay, so that's a mimetic spread. It was utilized a lot 10, 20 years ago. It's kind of evolved a little bit and gotten highly, highly nuanced. So in the case of what we look at, and where a lot of our unstructured structure information comes from, is in the form of what's called a team, or temetic science and temetic research. Now, a team is just simply a meme that's spread via a technology substrate, such as the internet, such as social media platform, et cetera, et cetera. So teams are how we do our research for understanding groups, and groups follow boundaries on behaviors based upon specific context and premise of why they're a group.
Got it. Okay. From memes to teams, not tomes. And then let's talk about the pivot to helping brands understand, from helping brands understand their customers to helping investors understand brand potential. Were there any human surprises, or what was that journey like for the founders out there?
Sure. So as a startup guy with two partners, I had one previous startup that was purchased based upon this as a foundational science that built the models that got the insight that we sold. That went on to be wrapped up in an IPO. So the second iteration, much more advanced. It was no longer the mimetic science turned into digital sociology, which I was a part of in the research group, and digital sociology then evolved to what we call collective dynamics. Now, this second startup we founded upon collective dynamics. And what we did is we found it was a very attractive value proposition, even in our early stages, to the Fortune 100. We garnished a lot of attention to where we were presenting insights based upon kind of an introduction such as I gave you to the C-suite level, and invited to do board presentations. And once we started building upon what we called trust coefficient, that's the most important thing with all insight and intelligence you're selling into an entity. We actually were promoted to give these insights and data bits to the various lobbyist groups representing the verticals within the Fortune 100. So that was a fast growth trajectory. Scaling was a bit hard. I won't get into the operational aspects, but as you might imagine, it was we were up over 1,200% at one time, and that's a pretty fast clip. So the applications, we had a full board. The application of the science and the output. What we found, and the pivotal part here was the pandemic, as it was for many small and medium-sized business, SMB. We find ourselves as classified as a consultant. We were doing professional services, and a lot of our, let's say, our sizzle came from face-to-face presentations. We were a great team, and what we found in trying to extrapolate that within the realities of the pandemic was it just simply didn't translate via like how you and I are talking now. And we ran into a significant inflection point, what to do. Whereupon one of the partners, and God love him, he started to utilize the information and started trading on it without telling anyone. And then they let the other partner in. I was the old guy in the group, and they didn't let me in into their findings until they both kind of until I was I call it an assault. They grabbed me by the elbow and took me into the boardroom and said, hey, we know you're going to resist, so we're going to lead without a story. Here's the data supporting our new position for a pivot, for which I wow and read. At least who could resist at that point? So suddenly we're now facing the regulatory hurdles and the red tape involved with registering as a hedge fund, and furthermore the sub-tier as a proprietary trading firm. We're doing a shift that's being overseen by our chairman. We're starting our own fund. We derived a new seed round, which would actually be an A round in this case, but it was a big pivot. That was pretty historic for our little town, and then we're off to the races.
Yeah, that's really exciting. And any founders and researchers in the audience, please comment your comments. But let's move on to the last part, which is the investment. So how do you recommend not investing in AI companies, and how do you recommend investing in AI companies?
So you want the insight on actual where the rubber meets the road here. Okay, let me see what I can do with that. So how not to let me explore that question a little bit more. It's how not to invest in what are the markers involved with something you shouldn't invest in within the sector of AI. Okay. Let's take it, or let's go kind of high level meta at first, and maybe we can make it down to micro. I promise to go at least meso on you. So from a high level, it would be, if I was looking at an investment, whether it be AI or some other sector, I would look at historic, and again, the timeline involved with the backward look is subjective at this point, but I would look with a backward look on elements such as news and information. I would then compare that to peers within the sector. Okay. And then from that, get a marker or a signal on strength and or weakness based upon specific timelines. I would then utilize your regular stochastic measures that traders should be very aware of, to formulate given we're talking about more of a social attribute or social signal, a momentum strategy, and employ that. Now, there's several momentum strategies. I can't really delve into that, but nonetheless, the genre of momentum trading, and utilize that also for what your exit strategy would be. So it's an entry and exit based upon the social markers, social conversational markers of interest. And that is at a high level, what we're defining is understanding trends before they're trends by utilizing a backwards look on this social phenomena. Hopefully that wasn't too generic, but
what if you don't have data, right? There's very little historical data on AI models and
a brand new one.
Yeah.
Yep. Well, that is where the comparative modeling comes into play, and selection of model is critical in this case. You need a one-to-one, as close to a perfect match in that, or at least understand the prioritization rubric and the elements and brought to bear what the differences are, so you can make up that delta within the overall calculations of the model. If this is a brand new subsector to the hottest sector out there, AI, it's going to be a little tough, but you can measure general degree, unless you are on the inside and understand there'll be an issuance or, on a reserve IPO list somewhere. You do have the degree to understand a comparative measure within the sector overall. So if stealth AI companies going and suddenly going to run into some type of offering, you can get a relative sense on the mimetic spread of this by comparing to the peers within the overall sector under investigation.
Yeah, maybe it's by industry and category, like
There you go.
historically, right? So
That's right.
I really believe AI has to be tied to a real problem, a real industry, not just a tack on.
Those seem to be rather ubiquitous suddenly. I know.
Yeah, I think I want to coin the meme tacky tack on.
So. I think you should. Yep. Right there. There's a trademark.
Well, we're coming to the close. How can investors find out more?
Sure. So I'm on LinkedIn, RR Neal, RRNEAL, Richard Neal, and they can reach out with any questions, any kind of inquiries, comments, critiques. Hey, even cursing, I accept that, equal opportunity. And if they're looking for marketing science or looking for fintech advice, or just simply want to discuss and chew on AI, I'm available for that as well.
Well, awesome. Thank you so much, Rich, for taking this time out of this busy acquisition or transition period. I really appreciate it.
Well, JC, it's been a pleasure.
Yeah, and everyone, reach out to Rich on LinkedIn. And if you have questions about my accelerator, validating your AI idea, whether it's a tacky tack on or a big disruptive deep change, get in touch with me. All right. Rich, let's stay on the stream, but I'm going to end the live stream for everyone else.
All right.
Thank you.